Good morning, traders. Good morning, Stelios.
Good morning, everybody.
How are we doing today?
Very, very well. The sun is shining. We have our elections on Sunday, by the way.
Oh, right. Yeah. And how is that going to go?
Well, the current government is ahead by 6 or 7 percentage points, which should have been enough to kind of form a government, but they've changed the that's what the many governments do. They change the rules so that they get the better shot next time they want to become a government. So two governments, so the previous government, before they left, they knew they were going to lose on the next election. They lost by a big mile, and they changed the law. But the law, you cannot change the law and have it take effect on the next election. It's always the one after. So anyway, it's a long story. I think it's going to be close.
Is it to make it a bit more spicy?
But yes, but anyway, it's going to be relatively close. But I think the current government is going to have to form a government in alliance with one of the other parties, the smaller parties. That's what they need. But let's have our fingers crossed.
It's going to be a bit like cycling in the Grand Tours, right? You get points for intermediate sprints. So
yes,
the winner doesn't take it all. Yeah. Alrighty, I'm a very happy man today. My team won the semi-final against Real Madrid of the European Champions League. We are going to Turkey to play the final against.
Nice.
So I was singing Blue Moon last night, which is the Manchester City song, you know. All right, enough of that. Let's get a little bit serious. What's happening? Well, quite a bit is happening. It's the majors are still relatively quiet, but there's a lot going on in the let's say the second zone currencies. But let's get over to some headlines first. So Biden and the others have decided they would go into the second round or the third round. They have decided on putting negotiators in there, staff level negotiations in there. The dollar is liking it. Asset markets are relatively well, equity markets especially are pretty much liking it too. And as we will see, US yields are liking it too, because there's a lot going on about liquidity in the market right now. And every day that goes by, how tight the liquidity becomes. And I'll have a word about it a little bit later on, unless you want to straight away throw something into the arena about it.
About what? About the debt ceiling and all that?
Yeah, I know about the tightness. There's a lot going on about the tightness of the rates and the reserve and the RRP and whatever markets and the TGA, which is starting to be tight. Apparently, the TGA is to fall below $70 billion tomorrow, and there's quite a bit going on in the markets about that. And I reckon it's partially also why you see especially the weaker currencies already starting to accelerate a little bit. The majors are also on the defensive, but perhaps less than the weaker ones. Anything to say about this tightness?
It's we've seen before what happens when they leave it to the last minute, because we all know they're going to extend the debt ceiling, right? They're going to raise it and do whatever they've done 79 times or however many it is over the past decades. But we've seen the kind of trouble both in the financial markets and in terms of the government's kind of appearance, you know, and their how people view the government. You know, it's a very difficult situation being an American or from the outside, seeing the government effectively potentially being unable to pay its you know, what it needs to pay. So it really doesn't look good, and I find it very, very hard to see how they're going to take it all the way again, just like they did when we had what was it called? The brain freeze.
On what?
No, when the there was a shutdown. Remember years ago? Sorry?
2013.
Yes, 10 years ago. So I don't think they're going to push it that far. I mean, these are politicians. They're trying to get their own interests forward, and in the end, they're going to find some kind of compromise. Every day that passes, it looks worse. But I personally doubt that they're going to push it all the way. So I think we may be, days away from resolution. Famous last words, obviously, but. I just don't see, as a normal human being, I don't see why anybody would do that. So
No, of course they wouldn't do it. But where I'm where the question really lies right now is that the market seems to react to it, right? And
yes.
we are in a little bit of this situation, and we've seen that, if I recall well, ahead of the event in 2013, but then afterwards it was a very mixed scenario for the dollar, that if you can't borrow it, if everything is too tight, you can't borrow it. You don't want to pay up above 5%, or it could be up to 6% at one stage in the short term. You just buy the currency, and I reckon we are entering that kind of scenario right now. And with every day that passes, it could get tighter and tighter, and perhaps that's what's going on in the market. And the correlation algos are probably understood that, and getting paid dollars as well, and so they need to buy dollars. They don't think about algos. Don't think, they just execute, right? So
yeah, it will get tighter and tighter as every day that passes.
yeah, so we could be in this kind of situation where, as I said, if you can't borrow it, you buy it, and we're perhaps I'm not saying it's going to happen, but we're perhaps in like a kind of scenario where we could see a very short-term blow off top in the dollar, and then all of a sudden, when everything is back in order, a bit of a meltdown.
Yeah.
All right. Anyway, that's enough speculation. What's going on in the rest of the world? China. Well, there's not many big headlines actually going on, but we have this China trying to chat up Australia a little bit, saying that they want to, they would like to join the CPTPP, which is the Trans-Pacific Pact club, which I think is about 11 or 13 currencies or countries or so. And they are trying to chat up Australia now by re-importing some of their timber, but it hasn't helped either of the currencies so far. But I reckon it's going to encounter a lot of fight back from the other countries. But at least China is seemingly trying, or understands that they need to do something to not get frozen out, because there's a G7 starting in Japan as well, and there are a few expectations doing the round there that, well, not only talking about Ukraine, but that some of China's practices are going to be highlighted. And as the UK Prime Minister Sunak already said, they want to impose a bit of stricter investment controls into and from Chinese companies into British companies, and British companies into Chinese companies. So the G7 may come up with some sort of headlines around China again. I'm gonna have a look on the dollar China a bit later, because it really accelerated the past couple of days. So, and at the same time, China is trying to counter that G7 summit by an Asian summit of their own, but there's no major country taking part of that. It's more like rather already satellite countries of China joining in there. So that's only a minor headline. Then we head over to New Zealand. We had the budget coming out in New Zealand, and as you can see, where is it? We had the budget coming out here, and although it's they predict a wider deficit than that they were expecting in December. the net debt is expected to be a tad lower because they revised their GDP in that report pretty hefty though, from a minus 0.3% in 2023 fiscal year expected to a plus 1% in 2023 expected. So they revised their GDP outlook a little bit better. The Kiwi benefited just a little bit from it overnight, but again, with the dollar being bid as it is, it's lost some of its shine already. Sorry. Yeah, this makes the Kiwi one of those currencies which are relatively resilient. We already spoke about that, or I already spoke about it in the room yesterday, about the resilience of the Kiwi compared to its cousin Aussie, for instance. Aussie, where we had a pretty sour employment report, it came in negative 4.3 thousand, where it was expected to show an increase in employment of 25K. And what makes it even a bit worse is that it's really full-time employment that changed for the negative. And also at the same time, the employment rate ticked up a little bit. That comes in contrast with the data that we had seen a little before, and putting a bit of pressure again on the Aussie dollar this morning. And we'll show the rates. We are on interesting levels there on the Aussie dollar as well. And then moving on to Japan. There's a couple of headlines out of Japan and out of this G7 and the interaction with other countries to increase those cheap manufacturing and cheap production, cross investments. Of course, the G7 is always used by the host country to try to get better and more trade and economic deals with the countries visiting. So there's a bit of positivity out of there, let's say, because some countries are already showing willingness to increase their cooperation with Japan. But then in the data, we had still a negative trade balance. That's been it's been a yo-yo, but it's not been very good if you look at it on a year-on-year basis, because it's been regularly in the negative territory, and we need a positive trade balance to then affect the current account, to then can affect the economy. And we're also seeing that it's coming with lower activity. The exports were lower than expected, quite a bit lower than last time as well. But look at the imports. This really testifies of not a lot of activity. It went down from plus 7.3. It's a year-on-year number, right? It's not a month-on-month. But it went down from a positive 7.3 to a whopping minus 2.3. So that to me is also something that keeps the yen in check, because the Bank of Japan is not only looking at CPI, but also looking at activity and also looking at a couple of other things. And since we know that they really want their economy to do better and support their economy, this in turn is not something that the Bank of Japan will especially like, in my opinion. But again, those are numbers that really change quite dramatically from 1 month to another. Next, quick look back at what we saw yesterday. Very mixed data on the housing market in the States. We had like this big drop in mortgage applications. It is kind of expected, right? When you get your mortgage rates flying, your application should de facto come off a little bit. But it's one of those little stones that can show us that the housing market is really slowing down. Still, though, the building permits and the housing starts were holding up. So we're seeing bit of a mixed bag in this housing market still in the US, right? Still, you were already talking about this housing market yesterday as well.
Yes, and commercial real estate is leading the way always, and it seems to be. And I read the other day some data on New York, on California. I mean, it was really not good. Like big chunk of commercial real estate being empty. And the problem is, like one of the guys, what was his name, Michael Guyed. You know, we used to have him on the Trader Summit event. Last year, he looks at real estate a lot, and he made a very good point. He said, "Look, with rates going higher, it's very people are not going to be selling their homes, right? Because where can they get the same kind of mortgage elsewhere? But the problem is, it's not the homes that people live in. It's all these people of the past 10, 15 years who have bought another and another and another and renting it out on Airbnb or wherever. That is where it's going to start." And then you know, when commercial real estate start really failing and having weakness, then it's gonna basically flow everywhere. And with rates where they are, with refinancing being well, a lot more expensive than it used to be even a couple of years ago, I really don't see a scenario where housing is going to be doing well over the next 2 to 3 years.
Yeah, absolutely. I don't disagree with that, and it's also a natural phenomenon, right? So
Yep.
yeah, we have to expect, but then it's all going to be about the degree of the decline, which is going to show misery or a softer landing or a softer scenario. Okay, thanks for that. So, and then over to the UK. There hasn't been anything out on the news, but at present, Bailey and some of his colleagues are talking to the Treasury Committee regarding QT, and he said, well, his main line was like, QT is not an active monetary policy instrument. It doesn't expect the balance sheet to go back to pre-financial crisis levels. And QT has some effect on the economy, but fairly small. It doesn't really have too much effect on the sterling this morning, but there was one other line that I picked up in the overnight news, and that was BT, British Telecom, is expected to cut up to 42% of its working force into 2030. Now it's spread over 7 years, but 42% is a big cut, and so that combined with some dollar strength, combined with a bit of technicality in euro sterling as well, and then Bailey perhaps, or yes but no, is making that the sterling is back on yesterday's weakest level. It's a big number, minus 40%, right? Still?
Oh yeah, absolutely. Yeah, it is. Yeah.
Okay, yeah. So what's next on for the rest of the day? We are going to have our weekly claims. Recall last time we were talking about this gradual rise, but not yet into levels where it's alarming. But we are keeping an eye, of course, on those data, and we will have the Philly Fed manufacturing numbers. Again, they are expected to show a deeply negative number. Look at the new orders expected to really come off a lot. We have seen the manufacturing data globally across especially across Europe and the States, but even if you recall, the IP in China was weak as well. So it would not come as a huge surprise to see another negative number there. In the meantime, we are having like a bunch of speakers everywhere. Yeah, I've posted the speakers corner in the chat room. There's really a lot of speakers we can expect. Really a lot of headlines, so they may affect a little bit the market, but for the time being, I think the market is really concentrated on what's happening with the dollar, the yields, and perhaps still this debt ceiling. For those having Mexican peso in position, we do have Banxico tonight with their interest rate decision. They expected to keep it at 11.25%. We know that a lot of the market has been and investors have been piling into Mexico lately. I also noted that whether even if it's not yet dramatically dropping away, CPI in Mexico is coming down a bit. So what I've said this morning in the room, I said into the event, I would not be surprised if the Mexican peso is a bit on the defensive, just because of the positioning, just because of the really decent possibility that Banxico announces at least a pause, if not the end of the hike cycle. So I wouldn't be surprised if this Mexican peso, I don't know how much to weaken, but at least trades on the defensive into tonight's Banxico events. Abir, do you see much strength juice left in this mix? I'm going to show the picture later. It's stopped. The dollar mix at least stopped on interesting levels. But then you always have two currencies in one pair. So let's have a look at this a bit later. And
Would you think if there's any? Sorry to interrupt, Kate.
Yeah.
Do you think there's any chance Mexico is going to hike? I mean, they're
No,
not cutting. They're not
think,
cutting, right?
I don't think they will hike. I think it's a bit of an ask for them to cut, because they usually copy pretty much the Fed, right? But
Yeah.
Mexico already signaled that they may be in for a pause. I don't think they will cut, and then this could be a case of getting the Banxico out of the way, look at the statement, see what they say, and if indeed the Mexican peso weakens a little bit ahead of the event, but the investors don't see any weakness in the statement or any clear indication that they are going to cut very soon, you may see like a sell the rumor buy the fact after the event. So I reckon the peso will be a bit volatile for the rest of the day, and then even after the Banxico.
Yeah. No, I agree.
Yeah. And then we have another round of before that we have another round of home data from the States. So that's what's on the docket today. We do have some auctions as well later on, and don't dismiss them. Most of the time they don't mean that much, but we have seen those auctions do like pretty funky things on because of this debt ceiling issue. And look at what the one before last, where is it? What the one before last and the last one showed us. We had this massive jump in the final rate. So be a bit careful of what's going on here. It could have an impact on the dollar. Okay, so keep an eye on those auctions. Right. Let's move over to some charts, shall we?
I can show a few things today if you want.
Okay, yeah.
Yeah.
So let me quickly run through. Or you want to do it first and then me going into
whatever you like. Whatever you like.
Go for it, my friend.
Okay. Let me, because we're getting to some pretty important levels here, as we are waiting for resolution.
Absolutely.
So I will start with yields, you know me, and 10 years trying to make a move, but really we're still within the broad range. We need to break above 360, probably 364 for me to say, right, this is now heading up towards 4%. But yields are still not the ones moving the market. I think yield, as we get closer to the Fed, and actually what are we pricing here? Hold on, let's go federal funds. What are we pricing? Let's have a look. Sorry about that. I should have had this open before. Quotes, there we go. So we are 94. And what is the meeting date? Do you remember? Okay, but anyway, we go down to 87, which is 7 basis points roughly. And I need to know which date it is. Anyway, we're pricing a small chance of a hike. And as we get closer to the meeting, my guess is, unless we get some kind of devastating data or really bad news from the debt ceiling debacle, I think we probably will edge a little bit higher in terms of probability, because the Fed have told us that, well, they haven't told us explicitly that they're pausing. That's the thing. It's an assumption that the market's making. And if I recall correctly, we get another inflation print before the FOMC meeting. So that could bring trouble for people who expect a no change. But going back to yields, we haven't really broken out yet. So the main mover is still the dollar. And we have an interesting situation where the dollar and stocks are rallying at the same time. So the Dixie has well and truly broken above, what was it, 102.80 we're talking about, and probably heading towards 104 now. And Steve has talked about this 104 level quite a few times, and we could easily grind there, and it's a grind, right? Look at the daily candles. It's not okay. We had a couple of nice green ones, but then it's like a slow grind higher, and it's not convincing in any way. It's nothing impulsive, as Gregor would say. So I'm guessing this is a lot of people have been short the dollar, and it kind of makes sense to be short the dollar. So maybe a few stops being taken out slowly. But the Dixie is, and the dollar in general is rising, and it's probably heading towards 104. 108, pretty important, nice big number. Sorry.
Yeah, it's the 14th of June, by the way.
14th of June. Okay, so let's have a look. So that 14th of June. So that's in mid-month, and we have 5. So we're probably pricing around 10 basis points of hikes. So
no, that looks bang in the middle of where they are now. 94.90. That's bang in the middle. The Fed funds are 5.25.
Yeah, but this is the daily Fed fund fixing. It will vary, but yeah, it's so May Fed funds will have the current rate, and then June is in the middle. So half of the June is going to have the current Fed funds rate plus or minus 1 or 2 or 3 basis points either side. That's how it fixes, and then you get the new rate for the second half of the month. So if we have 5 basis points difference, it means that the new rate is 10 basis points roughly now. Okay, this is like a broad calculation. The euro dollar, going back to that, 108 is probably a nice round number, and definitely a number of interest. A few of our friends have mentioned it on the chat. But if the Dixie goes to 104, I think we're heading towards this, the previous high, maybe 107. I don't know. We'll have to see price action, but
I will show it in a bit.
You'll show it. Okay, great.
There's pretty big levels really around here.
Okay, perfect. Elsewhere in FX, I'm still bullish the pound. Both in terms of against the dollar and the euro. Yes, it's down a little bit today. Is it because of Bailey? Probably. But it's definitely not an impulsive move again here. But technically, we are above a level of support, and here we are below a level of resistance. So as long as these two hold, I'm happy having a bullish bias in sterling. Dollar Norway, as you know, I tried to short at 1081. It moved my way yesterday, went down to 1076, something like that. And I said to myself, look, if it's going to break 1081 again, it's going higher. So I put my stop at break even at 1081 and it got taken out, which probably a good thing because I think that's now going to go higher. So I like these kind of trades where you can see that the probability is probably better than 50-50 for this to work. And if it works, then the way this is not a macro trade. Okay, this was more a technical kind of resistance trade. So if it works and it moves your way, I place my stop at break even. So my downside is nothing. If it worked and it carries on, then even great. Then I'll trail my stop lower. So I try to play these what I think are high probability trades and setups, but I'm very tight with the stop in case it starts going wrong. So that's why I did that. And okay, I wish all my trades when they fail that they break even. I wish it was like that. So I'm not going to complain. Now I think it's going higher, or it should be theoretically. And Euro Norway also probably going to be attacking these highs. I'm watching these two like a hawk and waiting to try shorts again. And the main thing is, when I'm unsuccessful, I hope that my damage is small, because when we are successful on this is going to go a long way. And so I'm still observing these. The S&P. So risk is rallying yesterday, rallying today again. We've talked about this. I've said it before. I think being short is very dangerous. And yesterday was a very good example of that. We had 6 daily candles of total indecision, and then 1% move higher straight up. And we have continuation today. So what do I think is going to happen? I think 4,200 gets broken, and I think we'll go to 43. If we get when we get a resolution on the debt ceiling, that will go in one day. I think we'll go above 4,200 in one day, and go attack 4,300. Maybe not in a day, but I think it's going to be a pretty nice and violent move higher. Taking stops, you can bet there's a whole lot of stops above here. 42.10, 42.20. I think these are all going to get taken out. So if you're short, I'm going to repeat: be very, very careful. The DAX is going even better, and it is now only 150 points away from all-time highs. So what do I think the DAX is going to do? I think it's going to blast above. Again, I'm going to repeat myself on a macro level and on a global environment. This is not a good time for stocks. Definitely not a good time, with high inflation, with higher rates, with companies laying off staff. You talked about BT earlier. Everywhere, it's happening everywhere, and this takes time to feed through to the economy. The employment part is always one of the last lagging ones, and we're going to see that. And with housing also dropping, so the wealth effect is being felt. The negative wealth effect is being felt by the average person. Everything you need to buy is becoming more expensive. Everything you own is probably going to be less expensive, less value. And most of the people, I'm not talking about the top 5%, most of the people are between a rock and a hard place now. So I fear that this is going to be a very difficult environment for stocks, but not right now. That's the thing. And I always tend to look, take a step back, and I look at weekly charts. I go back 10 years and all that. But, sometimes you need to look at what the market's telling you today. And today the market's telling you, or I think it is, that this is not the time to be short stocks. So I am going to reiterate the same. And I know I'm boring and I repeat myself, but that's what I'm going to do. Metals are under a bit of pressure. Come on, TradingView. Okay. Can you see my screen now? Sorry, I think I lost internet for a second.
No,
Okay.
I'm having the same kind of micro cuts.
Okay.
But we can see you, yeah.
Okay, perfect. So metals are underperforming or under some weakness because of the rallying dollar. Again, this is a short-term reaction. In the long term, metals do not care what the dollar does. The dollar has gone up and down over the past 30, 40 years, and gold has gone straight up. So in the medium term, yields, the dollar, we don't care. All I care about when I'm looking at gold is the deficits. I'm looking at debt. I'm looking at the expansion of money supply. As long as that's there, I don't think there's any other way for this to go but a lot higher. Now, in the short term, of course, all these market moves and market reactions are going to cause fluctuations. And here we're now very close to these lows, 70 and the fib is 1960. So, 1960, 70 is a very, very important zone that needs to be kept and held by for the bulls. If it gets broken, then we're most likely going towards the mid 1800s, so 1840, 1850, I think. So, you have to be careful with this. I'm still bullish, but in the short term, we might continue. If the Dixie goes to 104, this will probably get broken. So we might go down towards 1850. Silver is trading worse. It's now entering back into this channel that we broke a while ago. I haven't drawn it perfectly, have I? But anyway, it is a retest, which I thought would probably happen. That's why I got rid of my third position around 25, what is it, 62, I think. So I have that in the bank, which is good, but I now have my full position at an average of 23.20 or something like that. So it's just below here. If this gets broken, yes, we're probably heading towards 22. But again, this is short-term moves and affected greatly by the dollar, which is what we are seeing now. We're also seeing definitely saw profit taking, definitely saw stops being taken out on this one candle, 5% down day. I mean, it was a completely inexplicable day, but it happens, and it happens with silver pretty much more than any other instrument. So you have to be careful with silver. Platinum is similar story. Retesting this channel again. I may not have drawn it perfectly, but it did break out and now kind of retesting. I like platinum as well, and relative to gold and silver, it has underperformed the most. So over the past years, so maybe not a bad play if you want to get along the precious metal segment. Obviously, the leader is gold, which has done absolutely nothing over the past month or so. I mean, obviously it's dropped now, but we're still in a pretty tight range. And if you scroll back, even from 2020 onwards, we're in a relatively wide but very consistent channel and near the top of it. And if you think about what's happened in the global economy with rates and inflation, it is very commendable. The performance so far. Cryptos are interesting. I did say yesterday, if you were long, I think this is a time to bail out. It tried to rally yesterday along with risk. And let's face it, I said this yesterday again, if the S&P breaks above 4,200 and heads towards 43, I don't see how cryptos are going to drop. They will underperform most likely, but I don't see how they're going to be diverging from this risk proxy that they have been over the past, year or so. So it still doesn't look good, doesn't look bullish in any way. I still think my bias is still bearish on cryptos, but if equities rally and if risk rallies, they're going to follow. But at the moment, they continue to underperform, and Ethereum, probably similar picture. Haven't updated this in a while, probably get rid of that, don't need it. Ethereum is less clear and less technical than Bitcoin, but still not doing too well. So I don't know, anything else? Dollar CAD is one I liked, and we're talking about it down here. This is a really, really nice 7-touch support trend line. If it breaks below, or when it breaks below, I think it's going to break below. I'm definitely going to have a go at this in a similar fashion that I did with dollar Norway. It's not going to be a long-term trade. It's going to be a technical support break. These usually work out more than 50% of the time. I'm definitely going to try that, but we're not there at the moment. It's going pretty slowly in the middle of the range. And Kiwi, again, kind of sideways consolidation. I don't have a view on these at all. Very, very boring for the past couple of months. If we're going to break down below 65.6 in the Aussie, that's going to be important. But until then, we're range bound. 68 is the top side. So you might want to play the range here if you want, but I'm not touching them. That's pretty much what I had to show, Kay.
Right.
So
thank you very much.
my pleasure.
Okay, thanks. I'm going to share my screen now, but I need to warn people that I'm also having like micro cuts,
Yeah.
internet micro cuts. So if I ever go missing, don't worry, I should be back after really a couple of seconds. So first of all, I want to show this euro dollar I was talking about. We are inside the daily cloud. It's not a watertight one in the euro dollar. You know, clouds, I usually take them really in Japanese instruments because they are the ones who work usually the best. But it has been working in the past, so we need to just take it into account, especially when it hangs so close to a support line here in the euro dollar, which comes in also just below 108, and you have the 100-day moving average, which is as 108.05. And on the shorter term time frame, we also have some support in the euro dollar around $108. And then so that's why I'm saying this is a pretty important zone in my opinion on the euro dollar. If it come to break, which I may say it could be a technical break, but as I was saying before, it could be like a forced break where people need dollars, and if you can't borrow too many of them because it's too expensive, you just buy the currency for as long as you need it, and that could have as an effect that we actually break this at some stage. But on a fundamental basis, I don't see why we should break it. So I think I may put on my butcher's gloves if it comes down to this 107.75. Here we go. My screen is jumping again. And try to perhaps just for a little try pick some up and see what happens around this lower end 107.30s or so if we get a confirmation there. Just a thought. Moving over to the yen, and I know Sarkis has been asking a question about the Nikkei. Okay, there's a couple of reasons why Nikkei is higher. First of all, global equities are holding. If you look at the S&P, you look at the Nasdaq, you look at the Stelios just showed us the DAX. Global equities are holding. Secondly, since end of last week, beginning of this week, we've been hearing and talking about Japanese investors probably having fresh funds to invest. That's your second reason. Third reason is if your economy is doing, if the Japanese economy is doing better, because we've seen the GDP rising, it's usually a bit supportive for the equities, right? Fourth reason is that, but then that's a fact. Then that's a question of who was first, the chicken or the egg. But if the yen weakens, it has a tendency to underpin the equity markets. And last but not least, reason is the herd mentality. You may have seen over the past weeks, months, that Warren Buffett invested pretty heavily into Japanese trade companies, and he's making a bunch of money. So when Warren Buffett invests and he makes money, that attracts a whole suite of followers, and that is probably your fifth reason, and not the least, why the Nikkei is performing as it is right now. Also, don't forget that since Japan has been struggling for many years with very low growth, that the Nikkei and the topics have been underperforming equity markets versus the rest. If you look at as Stelios showed, we looked at it yesterday. At the difference between the S&P rally and the Nikkei rally, Nikkei is just back at 1990 levels, where the S&P is trading how many times higher, still? I forgot about it. 10 times?
Sorry,
40
the what,
times
sorry?
higher or so? S&P versus 30
Oh,
years ago. 40 times.
10, what was it? I can't remember
40
now.
times higher. 40.
Was it 40? No, it was
Yeah.
10 times.
No,
It was 300 something, right?
Oh,
Yeah.
Yeah, whatever. Make it 40. That's more spectacular. Anyway, so those are the reasons why this Nikkei is flying. And of course, then it has the effect of also, as I said, the chicken and the egg, has the effect of also pushing the yen lower, which also goes coupled with the fact, as I said, fresh investments, Japanese whales, regardless what they can do in the future about hedging or unhedging bonds, foreign bonds, if they go on a hedged basis, it should not have a big impact on the yen. But if some of it will be because of that's how their investment policy is, some will be foreign investment will be unhedged, and they will have to buy foreign stuff. So that are the reasons why we are where we are here now, and with risk doing well, and with the Bank of Japan probably being slower than all the rest. That's enough reasons for being where we are. So that is it. So now we're pushing against this 137.75, 138.10 again. In the dollar yen. If that would go, then there's not a lot for another 150, 170 points, I reckon. Getting very close to 140, but we'll have to see what happens to the dollar as such, because it's this morning it's very big, the dollar, but it's a bit of a mixed bag if you look at different currency. But anyway, for the time being, we are holding the on the very short term. We are holding this this break. So if ever, and we held it also on the Japanese data. So if ever you look at a very short term, keep an eye on what's happening at 137.30. I would say if we start to move back below, and with a confirmation below 137.0510, that could mean that the party is at least for now over. And then just replying to GW, you asked about the link, yeah, for the short term funds. I've put it in there, right? I hope you're you saw it, that I've put the link in there. Right, risk, the crosses. Well, Euro is a bit of an interesting one, because euro dollar is still feeling pretty heavy, and if you look at the euro crosses, they're still barring euro sterling, which is just hopping around this 87 level. It's still a bit lagging the rest of the crosses, so as well as euro yen. But we did get above this 148.60, which was our yesterday's level of interest. And we went up to the prior high here, 149.25. So that's your 149.25 here to watch on the euro yen today. 148.60 on the downside, and then this has been watered down. But since it did give signs of holding and hopping around this trend line, I would look at what's happening if ever today we get back below 148.25 or so. We may see a deeper reaction. So that's just for the euro yen. Watch that 149.25, and just above there, the 61.8 of the latest move at 149.5. I don't have any positions in it. I must say I'm just a follower of fashion. I don't really know exactly why we should continue, or why the party should be over right here and now. So it's a bit of a toss-up for me right here and now. One that I'm keeping an eye on, though, is this Aussie. Aussie dollar. Let me go first on the Aussie dollar. Aussie dollar is on support. It's holding support, but it's continuously coming and testing it. And we know what happens usually when you continue to test support. At one stage it gives way, and that's then probably going to spark a move down to 65.75, which is the bottom end of your channel, the range, if you want, that Stellus was showing as well. So if you don't feel like it, I mean, for me, I'm a little bit short Aussie. I will for sure take profit around there, and we have a secondary level here, which was the prior low around 65, 60, 65. So that's an important zone enough. And since I don't know up to where this market is going to need dollars, it's a bit of a, I think it's a market where still you have to take profits when your profits are there. I don't think it's a big trend market for as long as we are in this channel. It's a range market, right? And that brings us back over to the Aussie yen. And since I am a little negative biased towards the Aussie, we did break this trend line like the rest of the yen crosses did, but then we are struggling with this one. Okay, we had those spikes, but we're struggling with this one. And if ever there would be a setback, a decent setback in risk, I would think this may be a candidate for topping out somewhere here and start to have a look back lower. But it's still conditional for now. I don't have any positions. I'm just watching the game. I know Bran always wants to have a look at the cable. Look at what happened yesterday. We had this move above. I was just for the short term. I had a little bit of it, but then since this trend line started to cap again, just went out of it. We are back at our 124.40. Yesterday's low around 124.2025. So that's your support level. If it goes down below there, then I think, and this is approximately Stelios line, perhaps I should make it a red one to
make it pink.
Pink. Pink. No,
I have two daughters. I have to accommodate them.
Sorry?
I have two daughters, right? So,
yeah.
They have an effect on me.
Oh, here we go. You know, I've got my micro break again. I hope I'm back. Do you hear me?
You're back. Yeah, no problem.
Okay.
We didn't lose you.
Okay, so your important zone here, I think, on the cable is going to be anywhere between those prior lows and this trend line, which is 123.25. So you have like 25, 35 pips here that really needs close monitoring if ever this 124.2025 gives way. Okay, so this is your level. Top side, it needs to get back above 124.80 to have yet another try at 125. What else? Stelios already showed the Noki. I don't need to show that, but yeah, the MEX. Yeah, we have the Banxico tonight. So we had this kind of fakey breaky here on the dollar MEX, which was around, and I showed that before, 2017 levels. We briefly went below, but then straight away failed the break. And here we go again. I'm losing internet again. So we had this break. You guys hear me? Hello? Do you hear me? Oh, okay. So we had this break and now we are bouncing. The global trend is still pretty much clear, right? For as long as we on the longer term I'm speaking, right? For as long as we don't break back above 18.10 and even 18.5, the longer term is still going to, I reckon, for now, find sellers in dollar mix or buyers in Mexican peso, as we've been already talking about it many times. The Mexican peso is still the flavor of the moment, not only because of the manufacturing towards the US, but everybody wants to be there, investors wants to be there, capital wants to be there. So for the time being, there's very little reason to fight it. But if Banxico signals a stop or signals that they may start to think about lowering rates, I also do think that the position is relatively crowded. So I will not rule out that this is now starting to hold and we will have a move back, perhaps closer to 18. And the shorter end is also showing that there may be some, you see 1785, 18 the figure, that would coincide with that longer term trend line as well that I was showing. I would really not rule it out. Okay, if we start to break back below after the fact, and if the Banxico remains on a would it be a hiking path, or just saying that they are going to stick at 11.25% for quite a few months, then we may in turn see those same investors starting to come back into it, and then there may be a real risk of breaking this 17.40.50. But that's music for later today. I want to show just two more. Anne, somebody asked me about sterling yen earlier. Well, sterling yen, you know, if you look at this, we have this double top of up here, 172.25.35. It's really not far. So this seems to be really trucking along, and since we have broken again above this this line around 170.40.50, it's still looking up. Bigger picture, this is still very much very big, right? Because you're still putting in higher lows every time. So for as long as we stay above very short term, I'd say 170, 170.40, it's gonna hold, and why not retest these highs? If it breaks above here, 177 should be possible. Now, if we start to turn around in the yen, then we are going to have to look at this zone, 168 and a half, 168.40, and 168 the figure. So 168, 168 and a half. I think for the more medium term, those are your points of measurements. If we start to get below there, then possibly and likely the party will be over. But that may come rather because of the yen is bottoming out as a currency than perhaps the sterling. And the sterling seems very rangy for me. Okay, I want to show a couple more because I still have a little bit running in this one. Dollar yuan, it broken above 7, it stayed above 7, and it broken above the 701.5, the second confirmation I needed. It's above. We are even above the 50% now of the October, January big setback. So everything still points at a higher dollar China. But I also think, and I've mean to read something to have read something this morning, that the speculative positions in Chinese yuan are the highest in a good few months. So for me, I'm gradually, and I let some go this morning. The people in the room will know that, quite luckily, not too far from the high. And I'm going to gradually look to take profits again, because I don't know for how long in time the dollar will really remain big. I'll be a happy profit taker anywhere around here. If we see an acceleration, that's going to be good enough for me. On this round, the market doesn't really go one-way ticket all the time, right? And perhaps the Chinese will start to cough a little bit on if it just goes like one-way ticket above 7. Let me have a quick look at where PBOC fixed overnight. So they still fixed it below 7, and we're already at 7.05 in the CNH. So be a bit careful on that one. And the last one is dollar rand. So wondering about this 19, it held, and it held in some really good fashion. Then we closed the gap, and now we are trading above. We're still struggling with the prior high, but the way it's going, it's still very positive. I'm still looking to take most of what I'm left over. I'm trading it actively, but I think 1975 is going to be perhaps good enough. But my overall view is completely unchanged. I think the rand is still in big trouble overall. Horatio, CAD yen, yeah, CAD yen can go there if you get a break of this of 108 138.10 in dollar yen. There's very little reason why CAD yen couldn't go, right? Where is it? I haven't updated it for a while, but Yeah, I think I don't know, but it still looks pretty big, right? It looks pretty big. It has to hold, I think, 101.5 right now. Okay, this. I think if it goes back below 101.5, there may be some issues there for a move back to 100.5. But for the rest, yeah, there's a bit of resistance around 102.75. So that's it. And that is it for today, dear friends. Stelios, as usual, thank you so much.
Awesome.
Everybody,
thank you, Kay. Thank you.
Thank you very much for being here with us, and we talk tomorrow. And I'd say, to support Ryan, go Hammers tonight.
Yeah. Let's go.
Bye-bye.
Bye.